It's about that time of day again. My name is Joseph. Wednesday evening, August 22nd. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening with crude oil. Oil is bullish with multiple spike and channel patterns tonight. But the biggest clue on this chart is the short-term trading range telling me to look for a breakout pullback pattern tomorrow morning. The S&P is also bullish with its own spike and channel tonight, and I'm watching a key resistance trend line. Yes, resistance trend line coming down overhead for a breakout pullback of its own tomorrow. Nasdaq also bullish. Nasdaq also has a beautiful spike and channel pattern that tells me the most reliable buying opportunities are coming after a deep pullback, and I got my eyes on a reversal line on the Nasdaq chart for tomorrow. Gold is bullish, but gold is now trading sideways with a range here this evening, and I have my eyes on a key support level using the round number and those range expansion levels tomorrow morning. And I can't forget about the euro. The euro's bullish with a spike and range pattern of its own, and that tells me to look for buying opportunities below the range low using that 2-try rule tomorrow morning. I get a great newsletter in store for you guys and gals tonight. We get a bunch of movement in today's session, and of course with that means big opportunities setting up for tomorrow's session. Before we jump in and put the plan together for tomorrow's trading session, I do want to remind you, if you're watching me on YouTube this evening, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. I'll leave all the links in the description of this YouTube video. Also, if you have any questions about anything covered in this video tonight, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you always get notified whenever I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over to sidewaysmarkets.com. This is where all the action happens every day. I'll put all the links in the description here, and make sure you join our mailing list. That's right, upper left-hand corner, give me your name and your email address, and I'll send you an email every time I publish something new. If you're hanging out on social media throughout the day, StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of social media, right? Follow me in the lower left-hand corner for charts, links, updates, quotes, videos, all kinds of stuff you won't see anywhere else on the interwebs. And speaking of charts, how easy is this? All the charts from tonight's video can be ready on your computer for tomorrow's trading session. Right where it says click here to download today's charts, grab those charts and be ready for tomorrow. And don't forget, speaking of tomorrow, how about a free pass? If you're not a member here at School of Trade and you'd like to come out and get a deep dive into this trading strategy, see what we're all about in our trade room, grab that free pass in the upper right-hand corner, and I will see you in the trade room, right, as a guest, right, someday soon. And don't forget, if you have any questions, call the toll-free number on the homepage of the website, drop me a comment in the comment section, right, or hit me up on live support if you have any questions along the way. All right, let's roll those sleeves up. Let's get this party rolling forward here this morning. To start things off here tonight, let's double check the news reports for tomorrow. What's the schedule looking like for tomorrow? Tomorrow is quite a busy day tomorrow. We've got your jobless claims number at 8:30. We got the new home sales number at 10, and we've got that global economic symposium, right, starting up tomorrow, probably mid to late morning, and by tomorrow afternoon we'll probably be hearing some quotes, right, and some headlines, right, out of that Jackson Hole symposium, right, late in the day tomorrow. Now, as I talked about earlier this week, we are expecting this week to slow down as we go into Thursday and Friday session. Most of it's just because it's back to school season. We've got that kind of transition right now between the summertime season and the fall season. Kids are going back to school. Parents are kind of shuffling around their schedules right now. And you could definitely feel, right, that lower volume here this week. So we are anticipating a little bit of a slower, right, session here tomorrow into Friday. But that shouldn't be too drastic until later in the morning tomorrow. I would expect here tomorrow afternoon to be relatively slow as people are watching headlines coming out of the Jackson Hole, right, economic symposium. What will happen is you'll see headlines, you'll see quotes, you'll see lots of stuff coming out in the news media that will have traders scratching their heads tomorrow morning. But the big news tomorrow, though, is we get jobless claims at 8:30. You know me. I'm not a huge believer in the power of jobless claims. So I don't think that's going to be the big market mover here tomorrow. But I really think the market mover tomorrow is going to be that 10 o'clock new home sales number. We saw some existing home sales today at 10 o'clock, and boy, did that thing get, right? Boy, did that news get things moving here this morning. I would expect to see more of that tomorrow. So if I had to guess, I would say sweet spot tomorrow morning, 8 o'clock to 11 o'clock, right? That typical overlap between the London afternoon and the U.S. morning. That's going to be where the bread and butter is tomorrow morning. Watch tomorrow afternoon. Again, it's probably not going to be that, right? Probably a little bit sluggish tomorrow afternoon as we go into that Friday. And of course, on Friday, we got that Jerome Powell speech, right? Friday morning at 10 a.m. Friday is expected to be a relatively sluggish day as it gets later, right? We do expect the durable goods orders on Friday morning to get things, right, moving, right, nice and quickly for us on Friday morning. So early in, early out tomorrow and Friday with that Jackson Hole Symposium. And again, watch that 10 o'clock hour tomorrow because that's where we expect to see those big explosive moves. All right, let's jump into some charts here right now. We get the plan ready here for tomorrow. Let's jump into some charts here now that we know our news. Start up tonight on crude oil. We got crude, S&P, Nasdaq, gold, and of course we'll wrap up tonight on the mighty euro. Crude is bullish with a spike in channel, a trading range, and a measured move on the chart this evening. I can technically right now see two spike in channel patterns. I can see one major spike in channel, and you can see we're kind of trading above the high of that channel right now, which is relatively common. We oftentimes see spike in channel patterns turn into another spike in channel pattern, and you can see kind of a sub, right, or a nested spike in channel pattern, right, inside of that larger spike in channel, right? One thing is for sure, anytime I see a spike in channel, right, I know that I'm looking for that deep pullback followed by that seller failure, right, for the move back up to retest that high. So anytime I see a spike in channel pattern, I always know to wait patiently for that deep pullback. It may not come when I want it to come, right, but it almost always comes, right? So we get that deep pullback. Strong move up, right, into that spike in channel for that deep pullback, right, and then back up from there. Now you'll notice where that lines up, right? We had a short-term trading range, double tops, double bottoms. That short-term trading range happened, 10:30 to 11:30 here today. So just towards the end of the U.S. morning session, right, is we got that short-term trading range. Combine that spike in channel pattern along with that short-term range, right? Tag on the low of that spike in channel, and now you've got a great spot down here to look for, right, some buying opportunities. So that's the plan here for tomorrow on the crude. It's a pretty cut and dry plan. I've got that measured move target, that symmetrical ABCD target up around that 68-60 area here. But really, we're bullish. We're very, very strong to the upside right now. Any pullback is probably going to get bought up, right, like they did a couple times already this morning. And again, I got my eyes on this 67.60 down to 67, right, 21 area. So really at this point, I'm drilling down into support level here, right? That's my sweet spot for tomorrow. Now imagine now we get that deep pullback. If we get that deep pullback, let me zoom a little bit closer here, right? If we can get that deep pullback here, what that will do is that will cause the sellers in the market to try to reverse this trend, right? The bears will come in, they'll try to sell that pullback and take it lower, right? Again, it will look a lot like we saw back here, right? We go down, the bears try to sell it. When they fail, right, I'm looking for that buy off that failure. So strong move down, let those bears now, right? Let those bears now try to sell that pullback. Once we see them enter the market, once we see that nice juicy red candle on the chart, then we know those bears are in. And of course, at that point now, it's easy to buy into the stop losses, right, of those sellers, right? Because we know where their stops are. We can now look for buying opportunities as the market runs higher, right? Stops get run, price runs higher. Now, that creates the first opportunity here to be a buyer, right? That seller failure pattern. That seller failure pattern will almost always produce a nice strong push higher because the sellers are getting stopped out and they become buyers. And you've got buyers buying the low, and then now you've got sellers becoming buyers as well. Now, we don't want to chase after this move though, right? We don't want to chase after it and buy high here. What we want to do now is look to buy a pullback. Okay, to do that, I like to find a new hidden channel. I take that high, right, draw those trend lines off that high, bring it down to that low, you get it, right? And now buy the pullback, right? Buy that pullback off of that low, right? Buy the pullback off that low. So again, this is called what I call a two-try seller failure, right, into a bullish pullback, right? A two-try seller failure, right, into a bull pullback. Now, what if the market keeps going higher here? Right? What if we keep on rotating higher here? Not much changes, right? If we keep going higher here, not much changes. I'm still waiting for that deep pullback. One try, two try, failure. Failure turns into strength. Don't chase the move. Find that new channel, right? Find that new channel and buy, right? And buy that next pullback. Where are my targets? My targets are up around that measured move at 68.58. So relatively easy plan of attack here this morning. But real quick, if you're here for the first time today, right, if you're watching this video for the first time, or if this is your first time watching my nightly newsletter, we have a lot of videos on our YouTube channel here at School of Trade, I want to give you a shortcut. Right? I'm using a lot of terminology right now. I'm talking about patterns that we use every day in our trade room. But if you're here for the first time, or if this terminology is foreign to you, I want to give you a deeper dive. I want to give you a lot more examples of these patterns. And to do that, I'm going to put a free trading course in the upper right-hand corner. I'll also link it up in the description here as well on the YouTube channel. So either go into that description, right, or upper right-hand corner, grab that link, right, and join that free trading class. I'll send you an email, right, so make sure you register here today. I'll send you an email with a video that will go over all the terminology, all the basics of my strategy, as well as all of the entry patterns, right, that we use every day in our trade room. Trust me, it'll be one of the best investments of your time, and at the bargain basement price of free $99, right, how can you pass up on that offer? So pause the video, grab that free course, right, and then you can resume with me, right, once you're done. So bottom line is we're looking for that two-try failure into strength into pullback and back up. How do we turn bearish? Right? What does a bear market look like? Well, a lot of strength going higher here. So if this market wants to turn bearish, it's going to have to match that strength going lower. Strong move down, pull back to the moving average, strong move lower. What do we call this, guys? We call this the 1, 2, 3 reversal, right? And remember, the word reversal has an exclamation on the end, which means we want to see some strength. We want to see, as this market pushes lower, it needs to look as strong, right, as those buyers have been pushing higher. Right? Makes sense? So just because we get a little, right, a deep pullback here does not mean I can sell that, right, that move now, because that move is likely now going to fail and give me a chance to be a buyer. But once we see that follow through on strength, remember, we never chase the market. Draw that new channel, find that new high, and then we're going to sell off the top, right? Sell off the top of that channel, right, for that move back down. And if we can get a reversal tomorrow on oil, boy, oh boy, you saw how big that run was to start off today's session, right? We're looking at back around 66 tomorrow, right, if those bears can take control. Remember, a deep pullback is not a reversal unless they can hold it, right? If they can't hold it, we'll end up right back up to retest that high. Target for the buyers up at 68.58, right? If it keeps going higher, just wait for that pullback, right? And we're buying from there. Nice, easy plan there on the crude oil. Let's keep going. We're gonna rough things up a little bit on this chart, though. This one's not as easy, right, as the oil market for tomorrow. S&P is bullish. It also has a spike in channel, a resistance trend line now, and a measured move, right, and a possible range on the chart this evening. First of all, the bulls have control with this spike in channel pattern, which tells me to look for buying opportunities after a deep pullback to support levels below. But we can see this resistance trend line coming down overhead, right? That resistance trend line coming down overhead is a big, right? It's a big concern. In fact, you might even be thinking this could be drawn off the major highs there. So there's a couple variations to that. Right now, though, I think all we really know for a fact is we've got 1, 2, 3 tests of a trend line. Anytime you've got 3 tests of a trend line, you've got to take that trend line seriously. So we got that resistance trend line coming down. What does that tell me to do? It tells me that I need to either get away from this trend line or get through it. Either get through it by using that trend line as support, or I need to get away from it by getting a pullback. So the bottom line is buyers are smart, right? They don't want to buy into this level of resistance. They're either going to look for a lower price to buy or a higher price to get through it and then look to buy the pullback from there. That's the big clue here right now. Now, I have to also mention something. I'm also looking at this as a possible range for tomorrow as well. Because let's be honest, the bulls took control after that big drop off the high last night, right? News headlines come out, big drop off the high. It's obvious nobody's that concerned about, right, what's going on out there right now because the market immediately rallied back higher again. So big drop off the highs. Now, whenever we have a bear market like this, right, that turns bullish, okay, that move higher is usually extremely strong, right? It's because of this short covering rally, right? That big drop of the high, they couldn't run it back to retest the high. Normally, when we see a big drop like that and they fail, we're back to that high by the end of the day that day, right? When a bear market reverses, the reversal is often extremely strong because of the short covering rally. Right? The sellers who are in the market, they get out once they see the rally begin, and the price just rolls back to that high. But this rally clearly ran out of gas, and that tells me tomorrow may be setting up for a triangle or a range. But for now, it's a bull spike and channel, right? We may see this again. We may see it turn a little bit into a range tomorrow here. Pendulum swing up, pendulum swing down. I was very tempted here tonight to call this a range. The problem, though, is we don't have enough proof yet. All we really have is a suspicion. And that suspicion comes off of that big drop down. If the buyers took control right there, right? If the buyers, well, I think the buyers had control pretty much all morning this morning, right? But we can easily see this is where those buyers stretch their legs. If the bears really got out of this move, this would have kept on going, and we'd literally be talking about a big move back to that high today. But we're not. And combine that with the potential of a trend line here, yeah, I could easily see this thing starting to go sideways tomorrow, right? And again, with that Jackson Hole Symposium, right, that summit happening tomorrow afternoon, you know, tomorrow morning, time is going to be of the essence, but I'm not going to be surprised if we finish tomorrow smack in the middle, right, of a trading range. For now, though, what's the plan here for now? The plan is we're bullish. We want to be a buyer. I've got 2 options. I either want to get through that trend line, buy the pullback up from there, call it a breakout pullback pattern. The key to this is going to be get that moving average above 2, right? What I always want to see is us go up. How strong? Strong enough to get that moving average above, then we can buy that pullback. Once that moving average clears above that trend line, I can use that as a successful breakout pullback pattern. I'm also looking at, right, again, because of that spike in channel, remember, anytime we see a spike in channel, what do we look for? A deep pullback, right? So I'm also not forgetting about that spike in channel, because if we don't want to buy into that level of resistance, we may also see a strong move down. Moving average comes over. The bears will try to reverse that trend, and if they do, we're looking for that new channel, right? And we'll sell the high of that channel for a move back down to retest that 46.25, right? That'll be the plan if those bears can take control tomorrow, right? But again, remember, a deep pullback in a bull market is not a reversal until they hold it. So we may get this move lower. I've got kind of this little hidden channel I'm drawing in here right now, right? They may hit that hidden channel. 1 try, 2 try again. Strong move down, pull back to the moving average, right? Bears are going to sell it, and we get that failure. It's all going to be, though, how much space do we have between the entry and that falling resistance. That's the big variable. That's what I don't know ahead of tomorrow, right? Is it come down in one try, two try, failure back up? Easy. But if it rolls lower like this and then up and back like that, that's not going to be as easy, right? Because we've got that trend line coming down overhead. It'll be better for us to wait for it to get up and then buy that pullback above. Okay, so price goes up, breakout pullback above that high. Make sure that moving average is above. Price goes down, one try, two try, failure back up. Again, watch that overhead trend line. Price goes lower, strength, pullback, strength, trend reversal, find that new channel, sell off the high of that channel, and again, we're trying to go back down, right, to retest that 46 and a quarter. Now, there is potential here. We have a trading range, right? So what's going to look like is it'll do this. It'll go one try, two try, failure, right? But it'll get stalled out at that high. That'll be your cue now. This is a range. Okay, so watch that pullback, and that pullback won't be able to push through, right? It'll stall out. It'll pull back, go up, and then stall out again. That'll be your sign that we're looking pretty rangy. All right, so watch that when we go, and whenever we have a range, if it goes range bound, one try, two try, one try, two try, right? Failure back in. We call that the two try rule. Right? If you're brand new here at this stuff, you've got to learn that two try rule. Again, it's linked up in the description of the YouTube video, right? Grab that free course, upper right-hand corner, or in the description, and grab that free trading class. That way you can learn more, right, about the two try rule, because we use it in so many different ways here, right, in our trade room. Let's keep going. S&P looking pretty good. How about some Nasdaq? Nasdaq's a whole lot easier. Right? The big challenge right now in the Nasdaq is we're right knocking on the doorstep of going back to retest those highs. So the Nasdaq is bullish, a spike and channel pattern, reversal line, and a measured move on the chart this evening. The spike and channel, again, is bullish. You can see that spike and channel here. Right? That spike and channel is bullish. I'm also drawing in kind of that hidden channel low right there as well. Right? Spike and channel tells you what? Deep pullback. Move back to retest the high, right? That's that spike and channel tells me to do. Okay, then I got a reversal line. Key resistance level that can be used as support, 16 and a quarter. So you'll notice how, right, this trend line, this reversal line comes together, beautiful area of support, right? But don't forget about that trading range either. There's a small little trading range up here. It's a bull market into a range. How do we trade a trading range? The two try rule and focus on failures. It's a bull market, so what I want to do is I want to go one try, wait for the pullback, two tries. The ideal two try is a lower low on that second try. Once I see those sellers failing, we're looking to buy, right, that second try. So the key is, if we see, right, it's going sideways right now, one try, two try. Once you see that second try, then let's grab that rally higher, right, back up to retest the high. And at that point, it's almost a guarantee we're going back to retest yesterday's high as we push through the top of that trading range. All right, guys? Now, what if the market keeps going higher here, right? So we know we're looking for that pullback. We know we want that failure off of that low. What if the market keeps going higher here? Then what do? We wait for a pullback. We're still waiting. And if it keeps going higher, keep your eyes on this area right there, around that range. Nice deep pullback, right, and buy from there. There's one thing we don't want to do, and that is buy into yesterday's high, because that's where all the hell broke loose, right? That's the objective. As we talked about it last night, big strong move down. If they fail, the objective is to go back to where they came from. Right? That's mission accomplished. So if we keep pushing higher here, I'm not going to abandon this strategy. I'm going to keep buying low, waiting for that deep pullback into a failure, that failure into strength, that strength into pullback. And again, if you want to see literally hundreds and hundreds of examples, right, of these patterns, I've got them all outlined, right, and included in that free trading course, upper right-hand corner, and in that description, right? It's all linked up, right? So wait for it to pull back, try to sell it, failure, strength, pull back, and back up. That's the plan here for tomorrow. Pull back, failure, strength, right? And buying that move back up. And again, make sure you grab that free course. That way you can see real examples, right, of those patterns. I'm just drawing them up here for you here tonight. Let's keep going. So that's the plan there for the Nasdaq. How about the gold tonight? Gold is bullish with a spike in range, a measured move in the chart this evening. The spike in range has a bull bias to it. That tells me to look for buying opportunities now below the range lows using that 2-try rule. And the range expansion level just below 1200 makes for an excellent support level for those buying opportunities tomorrow. Now, we just talked about this in the Nasdaq, right? We get a bull market up into a trading range. Now, you can call this a triangle if you want, lower highs, higher lows. That's obviously going to be the easy giveaway right now. We're not making lower lows. We're not making higher highs, right? We're going sideways. Whenever I see a triangle, though, I always like to find the range. There's the range inside the triangle. If I take that trading range and I project it higher, you'll notice they're already using it as resistance up here. I'd like to use that same technique for a level of support down bottom. Remember, the market's bullish, right? So I want to be a buyer. And where do I want to buy? I want to buy down below that range. If I take that range expansion level, that lines up down around that 98.5 or so. That also lines up with some key levels of support here as well. So this area really looks to be, right, a great spot here. So really the goal is to use the 2-try rule, what I call the 2-try rule. 1 try, 2 try, and look for that failure back up in. Now, if we can go back to the highs here, can I sell off this high? Can I use that 2-try rule, 1 try, 2 try, and then can I sell that failure back down again? You can. The problem, though, is oftentimes these types of failures end up being traps, right? Can I see an example like this, right? Up, down, up, no failure there, trap, right? It oftentimes will welcome buyers are waiting to buy that dip. And again, it's because the market's bullish. So I don't want to buy high, I want to sell high, but in order for me to sell, I need to get that momentum turning back in the right direction. Again, because the market's bullish right now, I can easily 1 try, 2 try, failure. The simple momentum of the market will pull that thing higher here. However, right, as we go higher, 1 try, 2 try, I don't feel comfortable selling that market. What I'd rather do is wait for that collapse, find that new channel now, and sell the top of that channel. There's a big difference there, right? I always talk about the fact that it's all about probabilities, right? The probability of that failure pattern is a 40-60 trade, right? It's what we call a 40-60, right? It's a low probability pattern, right? The pattern as we go lower here now is above 60-40, right? It's a big difference. Because if you focus on taking 40-60 trades, once you pay your broker, once you account for slippage, right, you're losing money, right? If you take those 60-40 trades, pay your broker, pay your slippage, right, get all that crap out of the way, and you're making money, right? As long as your risk-reward ratio is balanced, right? That'd be the assumption. So it's always important. Remember the bias here, right? It's a bull bias, right? It's a bull bias. I want to buy low. 1 try, 2 try, failure back up. Trying to sell high, 1 try, 2 try. Again, failure's not going to work. Wait for that failure. That way you're not trapped in a trap going long. Find that new channel, and then we'll sell off the high of that channel. Right? That's going to be your bread and butter. That'll be the easy money, the easier money, right? Selling off that high. Okay, stay away from the middle. Buy low, sell high, and again, the emphasis on buying low here on the gold tomorrow. How do we break out of a range? What does a range breakout look like? We talked about the 1, 2, 3 reversal this week, right? Strength, pullback, strength. That's the same basic principle of a range breakout. 1, 2, 3. Got to see real good strength above the range. Right? So one of the most common questions is, for example, is this a 1, 2, 3 breakout? No, it didn't happen outside the range. This would be a 1, 2, 3 breakout there. It didn't successfully break out. Collapses back into the range. So I don't care what direction we go in, 1, 2, 3 breakout, fine by me. I'm not going to buy the breakout. I'll wait to buy the pullback because that's a much more reliable pattern, and trading is all about reliability. It's all about probabilities. It's all about reliability, right? So look for that big, strong breakout there or the downside, right? Strength, pull back to the moving average, right? Strength off the moving average. Now we're bearish. Now find that new channel, right? Sell the high of that channel, and we're looking for measured moves, channel rotation, back down to retest that low. So if we sit here going sideways tomorrow, be careful. One try, two try, back up in, right? One try, two try, failure, then back down in, right? Don't take that failure trying to sell. Wait for that pullback to sell it off that high. And again, plenty of examples of trading range environments, the two-try rule, failure patterns in that free trading course, linked up in the description or in the upper right-hand corner. So make sure you get your hands on that, right, to learn more. Let's keep going. Wrapping things up here tonight on the euro. Euro is bullish with a spiking channel, a trading range, a reversal line, and a measured move on the chart this evening. The spike in channel pattern, which you can see right here. That spike in channel pattern tells me you guys are experts in this, right? Deep pullback, right? That's what spike in channel patterns tell me to do. The trading range, though, I think is the real big clue. Double tops, double bottoms. Take the size of that range. It's a bull market. Now we know, right? We want to buy below that range. It's a bull market. Take that range. That's resistance. That's support. Okay, now you can see here now, these are lining up nicely with that reversal line. That reversal line, right, just below that pullback today was never used. So now look at all the levels lining up here. Reversal line around that 15,650. You got that channel line, right, kind of a hidden channel line down here. You've got that trading range expansion, right? It's a symmetrical range expansion level. This whole area looks great down here, right? We got 1, 2, 3 levels here, right, we can use as support. So how do we get long on this? Well, again, it will look like a failure pattern. Look just like this, right? We'll see a failure, strength, pullback, right, back up, or maybe look like this. Failure, strength, pullback, and back up, right? Failure, strength, pullback, back up. Again, I'm not making these patterns up, right? If you know what you're looking for, you'll know how to find these trades pretty easily here. Again, we see, right, a bunch right there, right? We see a bunch right there. You can see those, again, failure, strength, pullback, failure, strength, pullback, failure, strength, pullback. That's the plan for tomorrow. I know I've got my bull market. I know I want to buy that dip. Again, like I said on the gold, this is the euro, of course. If we go sideways here, just sit tight, right? Stay patient. If we go sideways in the middle, stay patient. Look for that one try, two try, and then back up in. It doesn't need to pull back all the way to that reversal line, right? I'll be fine for a one try, two try there. That's fine by me as well, right? I'm not arguing about that. I just want it below the range. I want to see a pullback. And then again, don't forget, right, one try, two try, this is going to be a bit tough to sell off that high, right, because you got that rising support trend line here. That's going to be a tough pill to swallow. If we can break through the high, let's not forget, we get the Jackson Hole starting up tomorrow. We'll have a lot of central bankers in one place. We may see some currencies move around here because of that. Tough to tell right now based on what we've seen so far. But if we do jump, right, if we really rocket higher here, right, if this thing really jumps higher here, don't chase after it. You got that measured move target just below that 16,900. Find those, right, those traps and look for that trap here. So it's really the one try, two try, failure strength pullback from there, right, or it's that trap low after a nice strong move going higher here. Those are going to be the two most reliable patterns we're going to look for tomorrow, right, on that euro. And again, right, it turns bearish. How do we turn bearish? We turn bearish, strength. Remember, though, a strong move down is just a buying opportunity for most people. Pull back. If this fails, we go back up, right? If it's strong move through, yep, now we know we're bearish. We know the objective is back down to retest that low, look to sell off that high, right? And we'll look to hold the runner back down to that low. We've had some pretty good movement on the euro lately. Hopefully we'll get some more tomorrow here as well. Again, get to it early tomorrow morning, though. Like I mentioned earlier, we got that Jackson Hole, right? Got that Jackson Hole party getting started in Wyoming tomorrow afternoon. No telling what's going to happen once that starts to hit the fan. Again, end of the week here, coming into the end of the month of August. I am expecting a little bit of slowdown in the afternoons, okay, tomorrow and Friday. And speaking of Friday, there'll be no newsletter tomorrow night. I'm going to be out of the office tomorrow evening, so no newsletter tomorrow night. Usually I do my newsletter Monday through Thursday evening. I don't do this very often, but every once in a while I will be out of the office. So tomorrow I will not be in the office tomorrow evening, right? So there'll be no newsletter tomorrow. So the next newsletter will be next Monday. We'll come back from the summertime weekend. If I don't see you guys tomorrow morning in our trade room, don't forget we open up at 8 o'clock Eastern time every morning, right, Monday through Friday in our trade room. Look forward to seeing you there. Right? If you want to learn more about membership, we've got membership levels, beginner, intermediate, and advanced classes here at School of Trade. Grab that free trial. Again, I've got the free trading course linked up in the description of this video, right? Don't delay on that we get that deep dive. And again, tomorrow morning, we'll see you guys there. If not tomorrow morning, we'll see you guys next Monday evening for the next edition of our nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.